Well, welcome to another finance talk with myself, Sapphire. And you know that all our talks, our finance talks, are based off our blogs that is released every Monday. And this week's topic was about financing options for your rental properties. So we're going to be talking today about financing your rental properties and how you can go about using various different finance tools to build out your property business. Each week we share this with you on a Saturday. If you have any questions or if you'd like us to also discuss different various topics, please feel free to share it in our comments. You can get us on all our social media handles. That's 50 Savvy Women at Twitter, Instagram, Facebook, and LinkedIn. So please feel free to share your comments in the feed. We love hearing from you and we love reading your comments, and we will answer all your questions. So let's get started. So rental investment. Many investors are now finding that rental properties can be an excellent way to creating wealth. Well, we all know this and we've known it for a very long time. But if you're considering getting involved in the rental market, it is a good idea to educate yourself on what finances are available to you. Because when you start out, you have to know what finances that you need to start on your property journey. And I'm going to be mentioning a few of them with you today. So it is important to understand the requirements of a mortgage. What is the requirements of getting a mortgage? Do you understand the requirements of getting a mortgage? I always tell my students that they should first of all get their credit file report to know how their credit standing is. That way, when you're applying for a mortgage, you know what lenders to approach and what kind of credit you'll be able to get and fund your property journey. Many of my finances have been done through a finance broker, and I use her on a regular basis to buy my properties. And I know exactly where my credit report sits and how much money I can actually borrow up to. So it's always wise to speak with a finance broker and discuss where you want to build out your portfolio and if you are able to get a mortgage for your property business. These are a few as well: mortgage brokers, local savers as well, loans or bank or private lenders. There's many different ways that you can get your properties funded. So start researching on the different ways in which you can also do this. So what are some of your options? Regardless of which options you choose, you will find that most lenders will want to be assured that they're going to get their rent covered and the mortgage covered by you getting a rent covered. So they do this based on lending you 75% loan to value, and you have to put in 25% of that loan to value. And so long as that is covering the rent and also covering your insurance, your other expenses, your taxes, your maintenance, they will want to lend you based on that criteria. And there's a stress test that they give as well. If you want more information on what that stress test is, please feel free to reach out to us at our website. That's savvywomen.co.uk. So what are the different types of loans that you can get? There's various loans. You can get residential loans or commercial loans if you're going down that route. So residential loans is one option that you can get. These types of loans can be used to purchase one or more properties. The exact options are open to you, and it often depends on whether the property will be owner occupied or it will be for a buy-to-let investment, a HMO investment or service accommodation investment. Commercial loans is another option. This option is whether you can buy more than one unit with this, and it's a non-owner occupier loan you can get. But always remember that a commercial loan is always higher in the percentage what you pay back, and it's always lower in the percentage rate in which you can borrow. But always check with a broker before deciding whether you're going to start investing in commercial units or residential units. So the difference between a commercial loan and a residential loan, one of the main differences is the fees and the rates and the frequency of higher commercial loans. A larger down payment is also often required. The down payment for on a commercial loan typically runs between 25 and 35%, while there are some lenders who are maybe willing to agree to a higher loan to value ratio. The requirements of qualifying you such loans is based on your individual circumstances. The lender will also be carefully examining your ability of the property to generate a cash flow that would allow you to repay the loan. As a result, the lender will normally examine the property to ensure, by doing a valuation, that the income ratio is there and a commercial or residential loan. Private party lending. Basically, this is getting lending from a private person. It's another option that people turn to, and we know it as investors. One option will be to approach a current owner, seller finance. You could do a seller finance loan. With this option, the owner is carrying back the cost of the loan, and you're paying a fair amount towards it as well. But they're taking a risk and trusting in you that you will clear down this. So that's a seller finance as well. You also have bridging finance or hard money loan if you're in America. Another option will be known as the hard money loan, which is we typically in the UK call it a bridging finance. This type of short-term financing where a third party takes a loan to assist the investor with purchasing the property. These are generally high rated loans as well. So you want to be knowing what your schedule of works is so that you're not carrying these costs over for a long period of time, because the amount of money that you'd have to pay back is also dependent on how long you have that loan for. And so you want to make sure that you understand when you're doing a bridging finance, the purpose of it and whether it's going to be profitable for you to do it. Points to consider: regardless of which financing tools you do choose, remember that there's always an option to refinance at the sometime later. So always look into your finances, always make sure that you are covered, look at your credit report, and make sure that you're able to afford to pay it back in the event of, if you're renting residential, you're turning it into a HMO or a single buy-to-let, that you can cover those rents as well. But always say, contact your finance brokers, contact someone with that knowledge to make sure that you're investing wisely and that you're getting the best out of your rental property. If you'd like to get in touch, remember that you can reach out via email at contact us at savvywomen.co.uk. You can go to our website, savvywomen.co.uk, or any social media handle, 50 Savvy Women. That's Twitter, Facebook, Instagram, and YouTube. And if you have any questions, please feel free to share it in the comments. I always go back and look if there's any questions that you may have or that things that you would like us to discuss in the future. But this is Finance Talk with myself, Sapphire. I hope you enjoyed it, and we bring this to you every week and every Saturday based on our blogs that we issue to you every week. If you haven't subscribed to our blogs that you can receive it, feel free to reach out and we'll get you on our subscription list so you don't miss out on all the great information that we share on a weekly basis. Speak to you next week.